I think the first trend that we're all very clearly aware of is this growing digitization within the industry. And maybe a better way to illustrate this is to sort of dig in on one subsector of financial services that we're all pretty familiar with, and that's retail banking. And we all know online banking, it's been growing steadily for at least a decade, more and more web accessibility, more mobile. These are all major drivers behind a lot of the investments within retail banks. And this is happening for a couple of reasons. One, it's the bar from a usability standpoint keeps getting raised. So usability, user experience is clearly important in driving that investment dollar to maintain the customer base, but also demographics. And as younger customers come into the workforce and are now consumers of financial services, they've grown up with iPads and iPhones, and they just have a level of expectation, a minimum usability of a product, and that is really continuing the investment dollars to make sure that they're attracting those new customers who will be the future growth for the company. So that's clearly a focus area. But also, I think the pandemic has actually accelerated a lot of the online adoption, where maybe traditional in-person banking customers comfortable with going into a bank branch really because of necessity. They know, because of the pandemic, limited in accessibility to the bank branch, were forced to adopt some of these mobile apps, some online transactions. And for the most part, the surveys, a year into this, is that the experience has been very positive. So much so that the expectation is many of them will not go back. So all of this is just really accelerating the adoption of online, which is coming to the detriment of physical retail bank locations. And we see in the UK and Europe and North America, the footprint, the physical branch count of these major banks is slowly shrinking, and as more and more of these transactions move online, which means the roles, the jobs within those physical bank branches are slowly disappearing. So that's kind of one trend with respect to retail banking. If you look at what some of the leading analysts that cover financial services are forecasting from a trend standpoint for the next decade, they're looking at somewhere in the neighborhood of a 10% overall reduction in workforce. Now, some of that is due to what I was just alluding to earlier, but also this increased use of automation and more technology. So think about technologies like RPA, robotic process automation. We're seeing a lot of this being adopted within financial services in the back office. We're seeing robotics in IT testing, call centers, trading is becoming more and more automated. Think about asset managers, where we see the increased adoption of robo-advisors, fraud detection, right? The list goes on and on. So more of these jobs are being replaced by technology, all contributing to the reduced headcount requirements in some of those areas where technology is replacing the jobs. The last driver, I think, is really from a competition standpoint. Not only do we see more and more competition within the industry, but also from outside the industry. Think about companies like Amazon, Google, Microsoft, Apple. All of these companies, which are not considered to be financial services companies, have all introduced financial services capabilities within the last couple of years, and the expectation is those will continue to grow. So not only are traditional financial services firms seeing competition from the emerging fintechs that we all know about, but also from big tech. So all of this is sort of driving where the investment is, where the competitive forces are, which is sort of shifting the skills that are needed today and will be needed in the future. So what are those skills? What do those skills look like? This data comes from a website called eFinancial's Careers. It's an online job board dedicated to financial services. And this is UK specific information. So I just went onto this website and pulled down the top 10 job segments within financial services and the number of open positions and put it in the graph here. And what you'll notice is technology, right, is by far and away the clear leader in terms of where the growth is, where the demand is for jobs, and in fact, it's 2 times the second place finisher. So it's clear technology is important today. I don't think anybody would forecast that technology will become less important in the future within financial services firms. One way traditionally financial services has addressed this is through outsourcing, right? Outsourcing has been part of financial services for the last decade or two. Very sophisticated users of financial services, but what this is telling us is that not all of these open positions are going to be filled by outsourcing. In some cases, these are critical roles that the financial services company, the banks, want to have in-house. They don't want to rely on a third party that once the contract is up, that talent just walks out the door. So I think what we're seeing here is these are skills that in many cases are required to be in-house because it's core to what the bank is doing and core to their growth strategy going forward. So clearly, outsourcing is important. It's an element to help, to aid in the problem, but it's not going to fill the entire gap. So the question becomes, well, how will we fill that? And it turns out, I think the pandemic potentially is going to show us the light. This is a study that was done by the U.S. Bureau of Labor Statistics, and what they did was they analyzed all industries and looked at the typical types of jobs that happen within those industries and made some kind of determination of how suitable is this work to being done remotely. And it turns out that the financial services industry and information technology, which is kind of horizontal in nature, could be applied to financial services or others, but these 2 industries are in fact the most suitable for telework of any industry. So, whether or not your CEO thinks telework is a good idea or not, that's really a separate story, and every company is going to have a different policy on whether or not they want to embrace telework or hybrid work. But I think the point I'm trying to make here is that it's clearly a potential solution to aid in this demand for technology workers. So I'm just putting 2 and 2 together. If the biggest pain point is technology workers, and those roles are also the most suitable for telework, then maybe leveraging this telework suitability, it could translate to a dramatically larger geographic pool from which to recruit workers from. If you think about an example in the UK, someone's commuting from the suburbs to Canary Wharf on a daily basis. Now they no longer need to do that once a week, maybe once every 2 weeks. Now they could potentially live much further away. You could recruit from much further away. They effectively would be getting a pay raise by not having to commute, or perhaps moving to a lower cost location. So all of this is a benefit, making that job potentially more lucrative and aiding in the recruiting. So the last point I want to make here is I don't think this is a one-size-fits-all, that this is a magic bullet, that everybody working remote is going to solve the problem, because I think there's different characteristics of workers. Some younger workers perhaps might want to be in the office a little more. Maybe people in the midpoints of their career, complex family situations, want to work maybe more from home. So it's a case-by-case basis, but I think this is a potential way to address that massive technology skills gap going forward within financial services industries.